Welcome back to Halftime. I'm Bob Pisani with today's ETF Edge. Options trading has exploded in the last few years, and now a particular type of options trading has become popular, and the ETF industry is taking notice. 0 days to expiration options are options contracts that expire the same day that they're traded. Sophisticated retail investors are using them to make a one-day bet on the direction of the markets. The heavy flows have attracted the interest of the ETF industry, which is looking to launch new options products very soon. Do these products pose any real risk to the stability of the underlying stocks or the markets in general? Let's talk with Ed Tilley. He's the chairman and the CEO of Cboe Global Markets. Ed, these 0 days to expiration options are typically S&P 500 options. They're monthly or weekly options. They're principally traded on the final day of the contract. What's going on here? Why have they suddenly caught on with the investing community and particularly with the retail community?
Bob, as you point out, we've had options that have expired on a single day for 50 years. The phenomenon that we're watching now is the interest in investors, both retail, institution, professional market makers like the groups that are standing behind me, really want to express an opinion on the shortest duration possible in the market, and those happen to be expirations that are every day in the S&P 500. So we've got really, really good uptake, a lot of interest across a broad spectrum of users.
You know, it's easy to see why this kind of trading is popular, particularly with retail traders. As a retail trader, I could make a bet, as you said, a one-day bet on whether I think the S&P is going to go up or down on that day. I can sell a put, I can buy a call if I'm bullish, I get a cash settlement, and I can do it all over again tomorrow. And we know the ETF community is salivating at the chance to open more options trading ETFs in the future. But does it worry you at all that we are greatly enhancing the ways that retail traders can make short-term gambles in the stock market? And we already know, Ed, that most never make money trading options. Does it worry you at all that there's so many new variables and ways to trade now?
It doesn't bother me that there are many more ways to trade. I think we get swept up in generalizations when we say, you know, options don't make money. Look at the typical spread here in zeros. They're long open, which means really identifying and limiting potential risk, or they're credit spreads. That means I buy one option, I sell another. Well, naturally in a spread, I'm okay if one of those legs doesn't make money. There's 50% of the open option trade not making money. That's okay. That's a winner for a credit spread. So we have to really watch our terminology and generalization when we look at what we're empowering investors of any size, how they want to access the marketplace. And that's what we're doing.
Yeah, I want to talk a lot more about that on ETF Edge. But another subject while I have you, you've got several applications for Bitcoin ETFs to list on Cboe, including Wisdom Tree, Van Eck, ARK. There's a number of them. Can you handicap the chances for us that the SEC will finally approve the applications this time? A lot of people seem to think that this surveilling sharing agreement that you've got with the exchanges is now going to make a difference. Can you handicap the chances that the SEC is going to approve this?
Difficult for us to handicap a regulator, but what we know is the regulators after really customer protection, certainly around the ability to reach in and really surveil that underlying market. In this case, agreements among exchanges really add to transparency. That's what Cboe set out to do when it was the first to apply for a Bitcoin ETF. So the more our regulators are looking for, the more we're going to give them, and the more certainty, the more transparency we can bring to the marketplace.
Okay, we're going to have a lot more on how 0 day to expirations options work with Ed Tilley coming up on ETF Edge at 1:10 p.m. Eastern Time. You'll learn all about how they work. We're going to be joined by Michael Green. He's the Simplified Chief Strategist. He's going to explain his concerns about these products, and he's going to explain to us why the ETF community is eager to get in on the action and how they're going to get in on that action. ETFedge.cnbc.com. Halftime report back with the call of the day next.